What's going on, everybody? So happy Sunday. We're going to do a little technical analysis breakdown on the NASDAQ, the triple Qs. So as we know, we've been in this downward selling pressure, 7% just last week on the NASDAQ. I think we're just close to 12%. So we are in a official correction here. So here's something to think about. Just before you go out and you say, you know, stocks are oversold, it's time to buy this dip, things are going to rally, you know, you're going to have to kind of hold on here. You know, if you don't think stocks can go any lower, they can. Okay. They can go a lot lower. We can get down all the way into the 300 on the triple Qs. If we take a look at what's going on here, I have the weekly time frame pulled up. Now, are we going to get a bounce? Of course. But am I going to be long biased, meaning I'm looking to just buy the dip and ride this out? You know, looking for longs to play? Not necessarily. And I'll show you where I would need to have the price action go before I start switching from sell bias to long bias. So weekly time frame here, this is the first close below the 50-day moving average on the weekly time frame. This is very, very significant. We've lost every single floor that we can think of. You know, short term here, on the weekly time frame, we're below the 20, the 10, the 5, the 50. We are approaching the 100-day moving average. That's going to be down here at around $320. So if I go ahead and pull up the daily time frame, this just looks absolutely, you know, horrendous. Now, could we get a bounce? I could most definitely see a bounce coming this week. We do have FOMC. We do have earnings kicking off for a lot of these mega cap stocks. You know, but I'm really not going to look to play long. Like, I'm not going to go into the day looking for longs until the triple Qs can close over the 200-day moving average. You know, that's as simple as it can be. $365. We need a close over that. You know, I don't care what the NASDAQ does. You know, it can rip 10 points tomorrow. That does nothing for the overall market. So if you can see here, we can completely come ripping up here, 360, 361, 363 even, chop around sideways and then come rolling back through 351. So, you know, if you're a scalper or a day trader, there will be opportunities to catch these bounces. The thing is that you need to treat these bounces as cash flow moves, meaning that, you know, if you're going to play a particular stock and you're going to bounce this stock, or you're going to ride this little dead cat bounce when we get them, because we will get them even in a bear market, even in a correction. We are going to get big swings to the upside where it's going to look like, hey, everything is great. You know, triple Qs rallied 1% today. Triple Qs rallied, 2.5% today. Really doesn't mean anything until we start closing over macro levels. And the macro levels that we need to get over is 365, which is a 200-day moving average. And then we need to get back over 390, which is a 50-day moving average, before we can even think about, the bottom being in here. Every bounce that we're going to get is, you have to just look at it as a dead cat bounce. If you're going to play that bounce, you're going to day trade that bounce, you're going to day trade that rally. Just know that when you get in, you play that rally to the upside, you're going to want to make sure that when you get profitable and you're able to collect profits, you do so. Don't just hold these overnight, for a week thinking that, hey, everything's good. We're going back up, because literally within the blink of an eye, they can pull the market back in. Again, like I said, until we get over the macro levels, which is the 200-day moving average and the 50-day moving average, all of these bounces or any kind of rally that we get is just going to be a mere dead cat bounce. As you can see right now, overnight futures has the triple Qs right now at around 350, 425. So could we gap up tomorrow, come into this 200-day moving average, 5-day moving average here? It's entirely possible. It's entirely possible. It's just the market is in a really bad spot, in a really, really bad spot. So I am definitely expecting a little bit of a bounce this week. But again, I'm only going to treat it as a scalp. I'm only going to treat it as cash flow. If you're a longer term investor and you're looking to, tell yourself, hey, this is a good opportunity to start loading loading the boat here, the last thing you want to do is start loading the boat, buying this dip to have a dead cat rally, come up a little bit, get rejected, and then come screaming through this 351. You can see here, going back to this channel on October the 4th is actually where we came down and kind of touched this level. So yeah, it's entirely possible we get this nice bounce off this area. But again, we're looking to bounce this right into 365, and then we're looking to clear up our positions and kind of see what the stocks want to do, what the overall market wants to do. If we can start reclaiming this, then we have another bounce in here to 374. Still doesn't mean that we're bullish yet, just means that, you know, we're getting a little bit of a relief bounce. Obviously, to the downside, if we are going to see more of a correction, maybe 15-20% correction, that easy short position is going to be through these lows here, 351.69, and then we're going to have to go all the way to the weekly time frame to kind of see where our measured potential is. And if we do, that 320 is the measured potential. And it may seem like a lot, another 20-30 points down, but that will be a full 20% correction on the NASDAQ 100 if we were to get down here into this 320, 325 area. So, you know, just stay patient. You know, there's no rush here. If you're feeling a little bit of pain because you're holding long positions, best thing you can do is days where we get bounces, days where we get rallies, hedge your long positions by taking some Qs or taking the SPYs short. You know, take some puts going the opposite way. So if we get a big bounce tomorrow, you know, we're not out of the woods. So if you're currently holding a ton of long positions, go ahead and take those Qs or take those SPYs and buy some put positions. That way you can kind of hedge those long positions. So right now is not really the time to start loading up and buying more shares. What it's time to do is start to hedge those positions, because if this does get worse, which I could see another 2 to 3 months worth of this kind of action, worth of you know, another 2 to 3 months of consolidation, another 2 to 3 months of downward pressure, another 2 to 3 months of you know, bear country. And if we are, what the only thing that's going to really save those long positions is hedging with some Qs, hedging with some SPYs, you know, going to the downside. And there's nothing wrong with that. If you have money tied up going along, what you're going to want to do is protect that capital. You don't just want to sit on the sidelines and watch your stocks continue to bleed out and bleed out and bleed out, and you know, kind of watch a dead cat rally come and then it gets taken away in 2 days later, and it's like, yeah, you know, yeah, you made a little bit of profits, and then, you know, the next day now you're down even more, and it's like every day you're looking at the market like, what can I do, what can I do? You know, instead of watching your positions bleed out, when we get big bounces, those are the days where you want to hedge short. Okay, hedge against your longs. So let's say tomorrow or Tuesday we get this nice relief bounce, we get a big rally. What you're going to want to do towards the end of the day, take some Qs, take some SPYs, go short. That way you hedge your long position, so that way when we do pull back, because again, all of these bounces that we get are going to get faded until we get back over the 200 and back over the 50-day moving average. So it's just playing, you know, the political game when it comes to managing your portfolio. You know, you have to be able to manage your portfolio. You can't just sit back and watch this thing completely, you know, just continue to bleed on you without doing anything about it. However, if you're a scalper or you're a day trader, you're going to love this environment, because yes, we're going to get those big massive bounces, and then we're going to get those big flushes. So right now is the time to put the, you know, the pedal to the metal and really take advantage of the volatility. Just understand that, hey, just because the market is ripping higher doesn't mean we're going to grab some longs and hold these positions all day. We're not going to hold them into tomorrow. Or just because the market is screaming to the downside doesn't mean that we're just going to put on some put options and leave those all week. You know, we're going to want to take our cash flow, because we are going to get those aggressive bounces back up to the upside, and then we're going to get pulled and we're going to get big nasty red candles to the downside. So, you know, it's all about managing your risk, managing your portfolio, and managing your emotions in an environment like this. But this is going to be a perfect opportunity for a lot of people to buy some money, or to make some money. And then when we do end up coming to a bottom, maybe in a month, maybe next week, you know, maybe in 3 months, that's going to be the really time to have that dry powder on hand, so you can load up on some of these stocks. A lot of times everyone, you know, has no problem buying stocks, chasing stocks when they're all the way up. And when the market is coming down, everyone is scared to buy, you know, but that's when the train sort of starts to pass you by. When you're scared to buy down here, but when you're scared to buy down in this area, but you have no problem buying up here, there's a problem. There's a problem, because look at this. Last time we had this little bit of pullback here going back to September, we pulled all the way back here. This was the time to start loading up, not here, not here, not here. Okay, so as we're pulling back here, yeah, maybe you can add a little bit here, hedge your position short. We will get this bounce, and then if we do come crashing all the way down, be pretty who of you to, you know, start buying down here. But if we come rallying all the way back up here, coming into the summer or the fall of this year, you're not going to want to be buying when we're up here making new all-time highs. You're going to already want to be in this trade somewhere down here. I hope that makes sense, guys. Just stay patient, stay smart. If you guys want to join my Discord, that link is down in the description box below. Also subscribe to my channel, leave me a like, comment, and I will catch you guys all in the next one.